morning. Welcome to Pries Capital. You must be the new recruit.
Oh, is this the new recruit?
Yes, it is.
Awesome. Follow me, Mr. Superstar. Here at Pries Capital, we love showcasing art. The stunning bronze dragon sculpture Pico by the renowned artist Nano Lopez is definitely a showstopper. And these pieces on the walls, the legendary Michael Godard is practically a rock star in the art world. There's art all over the office, creating a vibrant, creative atmosphere to work in and collaborate in. And here is Tyler Pries, our hardworking mortgage loan officer. If you're looking to purchase real estate in the Myrtle Beach area, Tyler's the guy to know.
Looks like you have your hands full. Ashlyn, can you grab a book for him? I'll see you at the meeting.
And here's Raj, one of Jason's right-hand guys for commodities trading. Good morning, Raj.
Good morning.
Meet the new recruit.
Hi. Hope you like to work hard and play hard. This is a high-stakes environment. Split-second decisions can make or break an opportunity. Welcome to the firm.
Don't worry about Raj. He's a quiet powerhouse, but he's critical to everything we do here. And here's the founder and real estate powerhouse herself, Tina Pries.
Good morning. How are you? So glad to have you with us. Can't wait to see you in action. We're just about ready to start the meeting for Jason's market analysis. I will see you both in the conference room.
Good morning, Jason. This is the new recruit.
Hey, welcome. We're glad to have you here. Your skill set is exactly what we need. I love people dedicated to their craft. But hey, I got to get ready for this morning's analysis, so I'll see you in a bit.
Thanks, Jason. You're awesome. Right here, we have one of our many conference rooms. And down the hallway over here, we have the intelligent and sharp-eyed Miss Jill.
Why, thank you, Ashlyn. Nice to meet you.
Jill thrives in the world of spreadsheets, balance sheets, and financial forecasts.
You'll fit right in, so go check out your new office.
And here's your new office. And over here, we have some welcome goodies for you. Just a small thank you of saying welcome to the family. Okay, so I've got to get ready for the meeting, but check out the gym over here, grab some coffee and bagels in this room to the right, then I'll meet you in the conference room.
Good morning. Thanks for joining us. Go ahead, take a seat. Welcome back to another morning market analysis. Let's get comfortable and dive in.
The liquidity sweep playbook. Why this rug pull can be a big payday today. Yesterday's FOMC tape was flat and choppy. No clear reaction, no clean follow through. That matters because when you get dead money through a major event and then earnings volatility shows up, the next session often turns into a stop run environment. And that's exactly what I'm watching today. So good morning and welcome back to another Team Day Trader edition of the Daily Market Analysis. Settle in, grab your coffee, and let's prepare for today's trading session. As always, if you're new, hit the subscribe button and explore the resources linked in the description below. How's everybody going this morning? Hi, William. I know James, he'll probably watch the playback or the recording. He was busy this morning. I talked to him a little bit yesterday, and actually we just were texting a little bit this morning. So, but anyways, hopefully he's doing good, and I'm sure I'll talk to him later. But anybody else in the chat, go ahead and say hi, as well as I always like to say this, right? Just if there's anything that you'd like me to see after I do the analysis, stock, however, go ahead and throw that in the chat. So with that said, let's get right into the Y-Charts dashboard, right? The dashboard sponsored by Y-Charts, however you want to talk about it. Futures pre-market, right? We are up. We'll talk about that in the pre-market analysis. Again, drivers, right after the close yesterday. Yesterday was a big day, I would say. You had FOMC, and then you had Microsoft, Meta, and Tesla earnings, right? So we'll kind of look through that real quick, just as like a quick refresher. The one thing I do want to look at and keep an eye on is, again, that 10-year rate. And if we have time, we'll look at that 10-year rate, especially in my world of mortgages, real estate, right, as well as portfolio construction. But I definitely want to keep this mantra going as a discussion, as what I perceive to be. And I was talking to a lender earlier in the week, and all these lenders, or these mortgage lenders, are all sitting back, which has been funny since 2020. Like, oh, rates are going to go down, rates are going to go down. There's this mindset of rates coming down, and I keep on trying to understand, like, either one, they don't understand the rates market and how rates are constructed. But you're not going to get, you in this environment, you need to have a legitimate recession, right? So if labor is doing decent, maybe it's not doing, we're not hitting on all 8 cylinders, but if it's hitting on 6 cylinders or 4 cylinders, right, it's not hitting on 1. And so it's hard for me to, and I'm trying to articulate it, and I don't understand why it doesn't come through. If you have a decent labor market, you got GDP pushing 4, right? You have labor market not breaking, maybe a little weakish, but nothing's breaking. You have the stock market at all-time highs. I mean, yesterday in the overnight literally made a new all-time high. Give me the environment where, why would the Fed cut interest rates, and how are you going to get interest rates down when also in the backdrop you have this inflation, a possible or high probability, I don't want to say possible, high probability of inflation kind of pushing through, right? If you got the fiscal, debt running hot, right? Or we're running this economy hot through fiscal levers, and markets are doing great, labor's doing okay. I don't know where everybody's talking about these cuts. Like, why are we cutting? What are we going to heat the market up even hotter? It just is hard. I know, everybody in this, sometimes my circle is real estate and mortgages, and obviously they want it down. I mean, they almost need it down. But other than those 2 sectors, I mean, everybody's doing fairly well. I mean, it's not like it's party like it's 1999, but again, we got to think, like, what environment can we get interest rates down? Anyways, that's a rant. I'm going to keep on pulling that because there is a frustration when I talk to people and their belief in it coming down. Now, if rates do come down, then that's telling you, like, the economy is dog shit, right? And that, they would only come down in a recession. And again, was that what everybody wants? We want a recession? I don't think that's what, if I ask people and, lie detector test, most people, we got kids, yada, yada. I don't think anybody in their heart of hearts wants a recession. Yeah, maybe they want prices to come down or something like that. But, it's a scale of waiting. Like, all right, well, you want prices down, we can do that, and we can just have a recession. And then boom, and then they're like, oh, well, maybe not. Anyways, squirrel, got on a rant. Hopefully everybody's doing good. Good morning, Lisa. So anyways, we will talk a little bit. I might have a chance to talk about rates. So Fed Watch, talking about rates. Let's just get into it, right? So FOMC happened yesterday. Powell did the presser. I might do a little video and do a summary video, just to, throw that out there. My 2 cents, not that anybody probably cares. But the one thing that I do want to illustrate is from a Fed futures, where market participants are putting their money where their mouth is. This has not changed, right? We've talked about a cut in June. That stayed the same, right? The probabilities has not shifted, and then we're still looking at getting a second one in close to, December time, whether it's October or December, but right in here. So there still is 2, even though I would consider yesterday, gun to my head, a fairly hawkish presser where the tone in Powell's posture, and again, he's only going to be here for a couple more rate cut or a couple more FOMC meetings or as the chairman. So we'll see how that plays out. But the tone almost illustrated where he was like, hey, there's inflation and labor is kind of coming more in balance and more, not this push-pull. There's a more of alignment, and where there's only like one cut coming into 2026. We'll have to see. I want to see as we get like a new SEP in the next quarterly SEP, how they play that out. But the tone in his posture and the words that were coming out of his mouth almost align more of what I'm thinking. Like me and him are on the same page. Labor is not cracking. Inflation is still a risk. More, I believe, than labor as of like current data. And I could easily see this shifting, maybe down into here. And that's what we'll be looking for is, does this shift into 2027 instead of getting that second one in 2026? Or does this just kind of get canceled and everything moves and shifts over? And this is just like a one and done for like a year or two. And so I'm watching that. Again, I'm just giving you my thoughts as well as, how I'm seeing it into the future, right? I don't want to call the word forecasting, but you do have to do a little bit of super forecasting and understand, right, to build the portfolio ahead. You don't want it so much be reactionary. You do want to have, and then what you're looking for is confirmation in your forecast, right? And then be willing to admit like, hey, I'm wrong. So, but as of right now, there's still two. That's the big takeaway from yesterday's presser is this probability scale did not move 1 inch. It's the same. So I think going back to the Y charts dashboard, a couple things going into today. One, we're going to trade today, but there's no data as far as scheduled economic data that's market moving. But I do, this is after close. We got Apple earnings after the close, and you got Visa. I really think let's take a look at that, make sure that's okay. And then also, I just kind of want to throw this out here as just archived in the, my thoughts is there is this government shutdown that's waning. And right, if we looked at Kelshi, this was up at 75%. And right after yesterday, this has got taken back a little. And now we're almost 50-50. I'm watching this. I think that could be, again, a little spark. It feels like these weekends, we close on Friday and then all of a sudden Trump or whatever's happened politically sets off, these gaps on Sunday opens. And so I think this is just something to highlight. I'm sure if anybody's not hiding underneath a rock, you're, you should have known this. This is known information. But I'm just highlighting it. This is stuff that I'm highlighting in my morning analysis. We're going through things that I do on every day before I trade, and this is something I'm keeping a watch on as we come into the weekend. With that said, let's close that out and get right into the morning market analysis. Right, as of 7 o'clock when I wrote this, obviously it's 8:40. We're about an hour and a half after. Futures were up 16 points. We're still at about 16 points, right? 15 and a quarter to be exact. Internals, though, are telling a different story. And this is where hopefully you can follow along, especially if you're new. If you haven't been doing this for a while. So we're up positive 16 points. And then when we do overnight skew, right, there definitely is a strong negative overnight skew of negative 4.9, and we're opening out of balance, right? So again, context. So that combination is a classic setup for a headline-driven pop that lures late buyers. And then the rug pull, which is a liquidity sweep, tests lower structure. So if we get that sweep, I'm immediately shifting my focus towards a downside rotation to probe the composite LVN, which we'll look at the volume profile on the LVN, on the volume composite work. In other words, I'm not here to chase the first push up. I'm here to let the market show its hand and then trade the rotation with traps, right? So given those ingredients, again, we're positive coming into the futures, but you have this heavy net skew of, it's a strong skew. Anything over, really 3 to 4, and we're at 4.09, so we're at that 4. That is strong skew. And then we're out of balance, so we're opening up out of balance, right? This definitely gives current ingredients of, I guess here I already wrote it. So out of balance, earnings volatility, strong net skew, and a rip above balance, right? Risks often becomes a trap. This often becomes a trap. And again, if you're day trading this on a day-to-day like I am, this is about probabilities, not possibilities. So this has a very high probable of being a trap. So in that, I'm looking at day trade setup 6 as my primary plan, right? Which best matches the two-sided rotation first session, where the market sweeps liquidity and then tests a level and then decides whether we're going to snap back or continue the liquidation, right? I'm also keeping, and this is very important. So, right, we do know that the market is bullish on an hourly chart, right? We're making lower lows or higher highs, higher lows. And, I'm not trying to say, hey, I'm calling for a major reversal. It's just the context of the event from the FOMC, right, was sideways to choppy, right? That's where if market participants really initiated anything, or there was anybody was really off position, you would have some kind of move, higher, lower, whatever. And the fact that it just stayed constrained was, right, a feedback, right? It's telling you something. And then when we come in, even though prices are higher, but you have a negative skew, strong negative skew, right? So that just sets up, again, that more rotation than screaming price discovery. Now, at the same token, right, you guys know I use an if-then. In my trading, it's if-then. I'm always if-then. So if this happens, then this should happen. It all goes together, right? I mean, if you're in a relationship and somebody cheats on the other person, right, then there's probably a divorce or a breakup. You know what I mean? It's not like if this happens, then, they're going to go out to dinner and it's going to be kumbaya. That's not how it works, right? There's these together things. If they don't cheat, then they'll probably stay married or stay together for quite some time. It's if this happens, this then, contributes to a result. So if I'm correct and this becomes a little bit of a liquidity sweep and you get a rug pull, then I should be anticipating day trade type 6. If that doesn't happen and there's key levels on the chart, then I'm keeping day trade setup 4 as a conditional only if the market proves it can accept above key levels, not just tag them. So in other words, day trade setup number 4 earns the right. It has to earn the right to be traded, not just base case trade first, then trade type 6. The environment coming into the overnight, coming into this morning, more gives a lean towards day trade type 6 than 4. So I don't want to try not to kill this horse to death so bad, but it's imperative that I'm crystal clear in not only, right, doing these videos, they're live, it's archived, anybody can go back. It's me, not being wishy-washy. This is who I am. This is how I'm trading. right? And I try to be clear in my analysis. So somebody doesn't say, oh, well, Jason said, yeah, the market could go up, it could go down, and it could go sideways. I hate that. You want to piss me off? Come into the office and give me that as your analysis, and I'm going to punch you in the face. So anyways, that might be a strong tone, maybe too strong for YouTube. So as long as we're holding static VPOC or static point of control of 7,275, buyers are still in control, and we have to give them the benefit of doubt. Dips can stay buyable, right? So 7,275, that is the line that needs to hold. Price loses 7,275, then right, that fails on the pullback, and then this is where you get the liquidity sweep scenario, right? It becomes real because now the market is advertising, you know, lower prices and searching for the next pocket of volume. So that's if the liquidity sweep happens. On the upside, if we hold the 7,275 and we build acceptance above 7,925, and I'll show you why that level is important and why we have to, if we're bullish, right, then that has to build acceptance above that level. I'll show you specifically why. That increases the odds that we do rotate to 7,043, right, and potentially extend as volatility expands. So recapping strategy, I'm trading the rotation, not the noise. If we get the sweep, I'm not going to panic. We're going to execute, or I'm going to execute. And then if we don't get the sweep and buyers hold the key levels, then we're not going to fight it, right? We're just going to adapt, right? So we're going to be very nimble in today's trading. So with all that said, I'm just going to close that out. Let's go right into just looking at Microsoft, right? So Microsoft is lower, right? We closed yesterday. This is lower, right? A little bit of, I'm going to show you a little bit of push-pull. We had, Meta earnings, right? And so again, that's a different character. We closed here. We are higher. And then we had Tesla, right? We closed, and then it's higher to, it's higher, but nothing like the gaps or the moves in Meta and in Microsoft. It's almost just a sideways rotation more than, right, a big gap up or a big gap down. And again, we got Apple earnings coming in after, and then we also got Visa, right? These are big. All these are top weighted stocks in the S&P 500, right? So you have Microsoft, which is the third heaviest weighting. You have Meta. You got Tesla. We're going to have Apple come out, which is the second highest weighting in the index. And then you got Visa down here, which also is in that, top. It's actually, I think it's like 11 or 12 because Google is twice, right? There's A share Google's and then B share. And so there's Goog L, and then there's just Goog, G-O-O-G, in there. So it's almost like counted twice. So anyways, those are the earnings. Keep your eye on that, right? We already, some of these earnings, is this a gap and then fade? Is all these are they gap and goes or gap and fades? Microsoft, Meta, is that a gap and go? Is it a gap and fade? And then same thing, Tesla. And then we got, like I said, Apple and Visa. I don't have anything to really say on a day chart on the SPX, so let's just get right into the volume profile chart. And again, and I want to probably bring this here. Right? This move from, and I'm just going to look at this week because I want to concentrate on just the week action. This week's action. Right? We closed on Friday, and then we opened up lower on a gap down in Sunday overnight. And we pushed up, back up into Friday's range. And then you had Monday push, and then you've had this malaise pullback, right? And then we get finally, and again, I want hopefully you can visually see this, but this is a spike into a channel. and very much on these patterns that we talk about day in and day out, right? We have spike in channel, we have spike in range, and then we got a spike in flag. In each one of these price patterns, right, has a mechanism of how these play out. And so when we're talking about a spike in channel in particular, right, this is how that plays out. Is you get a spike into a channel, right? This rotates, price rotates. You break the lower part of the channel, it comes down to the base, and then, right, this is basically like a hold the pole back and then go, right? Now, that's how, and this is how, again, that is the highly probable in most context. This is a continuation pattern. So now, why is this? When you ask yourself, well, Jay, you just are showing you this, and that says spike and channel, and this is how it plays out on a majority of the times. So then, when does this price pattern fail? Right? Because this is not something of, oh, Jay, you've back tested this, and this thing works. This is 100% guaranteed setup. No, there's failure patterns. So there is failures to this pattern, right? Where you get a spike in channel, you rotate, you break down. First reaction is, yeah, you get a first reaction, and then it stalls out and then breaks down. And then it goes, this price comes all the way back to where it started, right? And this is how the pattern plays out on a failure of this price pattern. Sorry. So again, this is very important where we're at. If you're long or you're wanting to see continuation, right? This holds, we open up, this holds, we don't get below 7,002, right? And then you get the continuation, break this high, and then this whole pattern plays out like it's highly probable supposed to. Like I said, in the market analysis, the reason why I am less convinced that's going to happen is just the market context, where this pattern is playing inside of FOMC price action was muted during the event. You have volatility because of price earnings, or because of, earnings, stock earnings. And then that's how the makeup is right here. And so because of that specific context, everybody, you always think about, and this was taught to me by an older trader when I was really young. And he's like, Jay, if you really want to become really good in this business, and, maybe he was full in, you can, whether it's a bunch of bullshit or not, you can take it for whatever it is. This is how he told it to me, and I'm just going to tell it to you. The market is a mechanism in where it fucks retail traders, right? Or newbies or anything like that. It's this mechanism of, it's trying to show you a hand to make you do something, right? But then it does the opposite and it runs you over. And right, this mechanism is not where everybody wins. This game is not a game of everybody gets a participation trophy, everybody gets a paycheck, right? Like if you got a job, like a regular job in America, right? Like if you suck at your job, you're probably getting a paycheck no matter what, because your employer has to pay you, right? There's regulations. It's not like your boss can come to you and be like, hey, you kind of suck this week, and, so I'm not going to pay you your paycheck. That's not how it works. So you're getting paid to participate even though you're good or bad at your job. That's not like that when you're day trading, right? So there is somebody wins and somebody loses. And so think of that. So when you got market makers and you have these traders in the market, real traders, algorithms, whatever, what are they trying to do? They're trying to extrapolate money from you to put in their pocket. And so this is a dog-eat-dog game. So, you know, every context has a certain situation to it. And so again, this one, right, we had all-time highs. And again, not to say that this doesn't play out like you see it on the chart. Like, hey, it's very cleanly, you can see it on the chart. Everybody else can see the spike in channel on the chart. Everybody else can see we're like within, 20 points or whatever of all-time highs, and we're opening up. So when everybody can see that, that's when new traders or retail traders really get confident. Like, oh, this is it. And that's where they wreck you, because your confidence level is so high, and at no way can the market go down. And then that's when they do like a liquidity sweep, and right, they wreck you because you're so highly confident and you're new at this game, and it's gonna go up. And that's the days when they really exert their power and wreck you. So, understanding the game theory in trading and in how these things happen, options, flows, all these flows, and the game that's getting played. And like I said, if this came in and we came in with the overnight skew positive, might have a little bit different. But you kind of have these again, and if something happened different with Powell's event, but I'm not convicted, confident neither that I'm right when I'm talking to you as far as I'm going to see a failure pattern. But what I want to articulate to anybody watching this is be careful, and don't come into today looking at price action, what you see on the chart and what's happened over Sunday, Monday, Tuesday, Wednesday, and then come in looking at Microsoft earnings, looking at Meta, and just be like, boom, we are rocketing higher, and have that level of confidence that then your ego comes into play and you hold on to a position where you should be letting it go. Because this is that environment, right, where you're so bullish or bearish, where you don't allow yourself to just be wrong, and then you're stubborn, and then you get wrecked. So that's why I'm kind of hitting this over the head, kind of hard today, maybe being a little bit harder than usual, because what I don't want to do is, we are at highs, right? Like, you are buying high. You know what I mean? Your risk management is horrible. Trade location here. Horrible, horrible, horrible. Right? Here's the all-time high. And it would be nothing for the market to sweep this and come back in. So, and then here you are buying at the highs. And then as it pulls back, you're like, oh, well, they're going to hold it at, Jason said 7,002. And, it kind of goes past that, and they give you like a little bit what looks like a trap. And so then you add, and then they go lower. And then, here you have a high volume node at 69.87, I think this is. And then you add to this because, you're like, oh, this is such a bullish pattern. And then you add, and then all of a sudden we're down here at 69.44, and you're like, 10 contracts deep, and you're just hemorrhaging your portfolio because you're just so stubborn. And I don't want to beat this too hard, but I'm only beating this because at one time I was that trader. At one time, these things wrecked me. And so it's out of that experience and out of that personal pain that I do know how this plays out. So it can go higher. I'm very open-minded to that. If it doesn't, and we get that sweep, I understand why the market would do that, because you would just have to wreck everybody, right? And then that would wreck so many retail accounts. So just be nimble and understanding. I do want to show you guys, because I did reference that 7,009, and so let's look at that real quick. right? And so here is where that 7,009. So we do have the 7,002 that has a reference point because of yesterday's static point of control, right? But say it comes down here, hits that 702. This is then where Fight Club plays out at 7,009 and a quarter. And then just make sure that doesn't get absorbed, right? And then they sweep it, right? That's the watch for that sweep. Now, if it comes down into 7,002, comes up and, right, the buyers do hold it, and then we go higher, then I just told you how that, plays out. But that's why in that morning analysis, hopefully you screenshotted it when I had it up, is so you can read it and kind of use it for your own reference. But that's where 702 or 7,002 becomes that intraday must hold for the buyers. 709 becomes the Fight Club. And if they can hold, right, then day trade setup 4 and we're in price discovery mode. But again, with Apple earnings later today and Visa, and again, with the overnight negative skew, there's a high propensity or high probability of more rotational trade. And again, sweep some late longs and right price comes in. So that's where all these levels come in and why it's highly, and then hopefully you understand, as price is moving live, you're understanding what is happening, so that you can be confident in, whether you're shorting or whether you're going long into today's trading. So with that said, let's now go to the trigger chart and we'll finish it up here. So again, coming in line with the trigger chart. And if I didn't talk about it yesterday or this week, not yesterday. And anyway, by the way, James is in here, and talking to James yesterday. I do want to apologize to not showing up yesterday. I tried to be punctual with you guys. I ended up just staying at the house. I got the same setup that I do here in the office at the house, and the night before on Tuesday night, me and the wife stayed up late, right? I'm a human being like anybody else is human being. We stayed up till like 2 o'clock in the morning, and I didn't, I usually get up at 5 to kind of come into the office, and that didn't happen. I kind of did get up at 5, and then like 5 minutes later, I was like, the hell with this, and I'm human like anybody else, and so I'm just being brutally honest with you guys. I just went back to bed, and then woke up, and then just traded at the house instead of coming into the office. So that's my excuse. Just being honest. So I'm sorry about not doing a morning analysis. So anyways, let me get that out of there. Get that out of the way. This week's, I draw these up, or this up. I don't know if you can see this box here, but I draw this up because this is on Sunday. Well, sometime between Friday after the close and Sunday before the market opens, I usually take and all right, what is the weekly options chain probabilities? And so right on a distribution curve, right? So everybody knows like a bell curve, right, in math, and you got one standard deviation. So what I'll do sometime is what is the weekly expected move? And I'm always looking all right, what is on a one standard deviation? What is the weekly move in the options chain? And then I kind of plot it on the chart. And so I usually have this on a different chart. So, but I don't show you all my charts. But so I've been lately trying, I was like, last week I was like, I'll throw this, this on the trigger chart so that when I'm talking about it with you guys can kind of see what I'm looking at. So on the options, the weekly options expected move, the upper limit of the one standard deviation was up here. Let's get it exactly. it was up at 7,040. That was the expected high watermark for the 1 standard deviation weekly move. And so, right, we kind of tapped that in the overnight yesterday morning, right? And then we're kind of pulling back. So again, we kind of already tapped that higher level. And again, all these things are, I'm trying to show you all the different contexts to the market so that you can have a clear understanding and you're not coming in here with an analysis paralysis or, you know, a hope and pray strategy, because that is the worst strategy, whether it's trading or in your life. So hope and pray never works for anybody. It might work. I shouldn't say that. It works sometimes, but over the course of your life, that strategy will wreck you more than it'll help you. Very important context. So with that said, we tapped it, you know what I mean? We came in, you had no movement in yesterday's real event, and then you had the earnings. And the only reason why we're up is because of those earnings. If Microsoft didn't have earnings or in that price action, or if Meta didn't have it or anything else, where would price be? Price would probably be sideways to down as we came into today's session. The only reason is because those companies have such a high percentage weight in the index, and then you got that. So that's it. It's not like this is the market saying these are prices. That's why I say, like, the sweep is right there to be swept, where people are long, they're late longs, right? And retail comes in and then they sweep it. You know, they just play a smarter game. So we already tagged that higher probability. So again, like, it wouldn't be unreasonable where this pattern fails and comes on in. Again, 702 is your mark, right? 7,009 is the fight club. If that does hold, then, you know, it's not as, they just don't, you know, they're not as mean. I'd probably say the word mean, right? Like, if it was me and it was mine, I would sweep you and wreck you and then take your money and then go home and, you know, take the wife out to dinner. And that's how ruthless. So that's, you know, this game is cold-hearted. And so, you know, these players are not nice and they're your best friend. They will gouge your eyes, cut you open with a spoon. And so I just want to make sure everybody understands context. And again, though, the market is made up of many participants. So if we can get institutional money to come in, we already know passive flows. So if you can get, you know, because of these earnings, and you do get allocations or an increase in allocations, right, then there is some potential. I would also want to say one other analogy. And this is, again, if you, and again, I'm just thinking of hedge funds that I know, friends of mine, if they've been, you know, they enter in a position, if that position goes up over time, right, then it becomes a heavier weight in their portfolio, right? And so people always ask, like, everybody always knows when to get in. The answer to get into a trade or get into a stock, I always feel like I get new traders that come in, they're like, oh, I'm so good at executing when to get in. You know, I know when to jump in and buy. And so that's like the easiest. Anybody can do support and resistance. Anybody can say, like, hey, this is great value, and they know when to buy. The thing that most traders and market participants don't know what to do is, when do I get out? Right? I'm in, I'm losing money. Where do I put my stop? Or I'm in and I've made a killing. I've made 10 grand today trading. All right, well, do I stay in and make 15, or, you know, is that it? And then price comes back and those unrealized gains, you know what I mean, pull back, and now I have an $8,000 day instead of a 10,000. It's the end question of, when do I get out? And so think about this. If you were long a stock and it's made great money, and then it just blasts off on earnings, right? You sell into strength. That is a time to sell into strength. So again, think of portfolios, all these great years we've been trading, you know, they're overweight, you know, maybe they have a heavy weighting in Microsoft or heavy weighting in Meta or Nvidia coming up, or you know, Seagate might be another one that blasted off yesterday earnings. Where do you unload? And so a lot of times you unload into that strength. You get a blow off top or whatever. That's what makes it a blow off top, is it blows off and then everybody's like, that's it, man. Sell it. Collect gains. And maybe they don't sell the whole position, right? But there is some selling pressure because they're taking profits and then reallocate that somewhere else. And then if you do get a nice pullback, then you'll jump back in, right? It's like a rebalancing strategy. Very simple, stupid. So again, think of that in context of today. All those different things, trade accordingly. Hopefully I, you know, gave you some good things to think about and understand. And so however you trade today, afterwards you can kind of look back. You know, what did Jason say? Was he right? Was he wrong? Does he not know what the fuck he's talking about? You know, do I know what I'm talking about? And you can put that into your own analysis. So I don't see anybody putting anything in the chat for me to look at. So I'm not going to go into too deep. It's 9:12. It's almost 15 minutes before the market opens. Again, if you're in Myrtle Beach and you want to stop by at the office, come take a look at us. Check us out. Have a, you know, sit down. We are always looking for traders. You know, you know, you can join our like-minded community here in the office. And again, here's our office address. Here's our company phone number. This is the day trading email. Right. If you're interested in trading, the website. And then if you want to check us out as a firm and what we do all together, the private equity, the investment research, right? Finance, the real estate, you can go to priescapital.com. Yeah. Hope you guys have a good day trading today. Be nimble. I think that's the words I can say. And then I will see you guys tomorrow morning. As always, learn, trade, profit, and out.